Saudi Kayan suffers steep Q3 losses and ADQ's assets grow to $157 billion. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. Saudi Kayan petrochemical company has posted a $216 million Q3 net loss. It's citing a decline in average selling prices of its products, coupled with a rise in the average cost of raw materials. Saudi Kayan's steep losses contrast with $667.45 million of net profits in Q3 last year. The petrochemical company's revenue also slumped by 24.4% to $690.8 billion in the quarter. Sovereign Wealth Fund tracker Global SWF estimates that ADQ's assets under management have grown to $157 billion. The smallest of Abu Dhabi's three main sovereign wealth funds, ADQ has emerged as one of the region's most active deal makers. Global SWF suggests it could even merge in future with Mubadala Investment Company, Abu Dhabi's second biggest SWF. ADQ began in 2018 as a holding company for government assets and has been consolidating its portfolio, privatizing some assets, and making strategic acquisitions. And Alif Capital, the Abu Dhabi-based female-founded private equity firm, has secured a $125 million investment from ADQ in the launch of its maiden fund, Alif Fund 1. ADQ's investment accounts for half of Alif Fund 1's $250 million target private equity fund. Alif says the timing is perfect for a GCC-based private equity to invest in the region's mid-market growth stars. Alif says once they're equipped with digital and tech-enabled levers, they'll power the diversification and transformation of the GCC economy. Dubai Holding and Mdad have signed an MOU to explore and invest in projects aimed at fostering the recycling and sustainability sector in the UAE. The two entities will work on new initiatives for environment-friendly projects here. Mdad says the waste treatment, recycling and energy recovery projects planned at its Fars facility will contribute to the UAE's sustainability efforts. Dubai says by partnering with Mdad, it aims to assist Dubai in its goal of sending zero waste to the landfills by 2030. Hong Kong stocks plunged by more than 6% to close at a 13-year low today as investors were spooked by Chinese President Xi Jinping's decision to hand key economic posts to loyalists who back his zero-COVID strategy. The Hang Seng ended down 6.36%, its weakest level since 2009 during the global financial crisis. The Shanghai Composite Index slipped 2.02%, while the Shenzhen Composite Index on China's second exchange shed 1.76%. And those losses are evident in today's Forbes RealTime Billionaires ranking, where the biggest losers today are all Chinese. Tencent's Ma Huateng is down $2.4 billion with net wealth of $24 billion. Our second biggest loser today is bottled water mogul Zhongshan down $2 billion with net wealth of $59.8 billion. And our third place loser is e-commerce mogul Wang Xing, down $1.4 billion with net wealth of $8.8 billion. Check out our website and our social media for all of the latest billionaires news. Tesla is slashing prices in China. Entry-level Model 3 and Y cars will now cost up to 9% less. The move goes against a trend of rising prices across the industry. It comes amid signs of softening demand in the world's largest car market. Analysts say China's car market faces a looming price war. September figures showed EV sales rising at their slowest pace in 5 months. Tesla says its price cuts are merely in line with costs. And in their latest food attack, climate activists today smeared chocolate cake over a waxwork model of Britain's King Charles III at London's Madame Tussauds Museum. The Just Stop Oil demonstrators said in a statement they were demanding that the government halt all new oil and gas licenses and consents. They say they staged the protest to protect this green and pleasant land, which is the inheritance of us all. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. See you tomorrow.